Namaste dear students, welcome back. So today I am here with one more illustration number 12 on liquidation of companies. So today we are going to solve a problem which has been asked in the year November December 2009 question paper, University of Mysuru. So let us look into the problem. Mayura Company Limited went into voluntary liquidation on 31st December 2005. The balance in its books on that date were liabilities rupees, assets rupees. Under liabilities, a share capital, under that 5,000 6% preference shares of rupees 100 each, 5 lakh. 2,500 equity shares of rupees 100 each, rupees 75 paid up, 1,87,500. 7,500 equity shares of rupees 100 each, rupees 60 paid up, 4,50,000. 5% mortgage debenture, 2,50,000. Interest outstanding on debentures, 12,500. Then creditors, 3,62,500 rupees. So on the other hand, asset side, land and building 2,50,000, machinery 6,25,000, patents 1 lakh, stock 1,37,500, debtors 2,75,000, cash at bank 75,000, P&L account 3 lakh. So this is the balance sheet which has been given in the problem. So now let us look into the adjustment part. So in the adjustment part, the liquidator is entitled to a commission of 3% on all assets realized except cash and 2% on amount distributed among unsecured creditors. Creditors includes preferential creditors rupees 37,500 and a loan of rupees 1,25,000 secured by a mortgage of land and buildings. The preferential dividends were in arrears for 2 years. The assets realized as follows: land and building rupees 3 lakh, machinery rupees 5 lakh, patents rupees 75,000, stock 1,50,000, debtors 2 lakh. The expenses of liquidation amounted to rupees 27,250 rupees. Prepare liquidator's final statement of accounts. So this is also one of the regular problem which we have solved so far, the same kind of problem. There is no much difference. So let us solve the solution part for this problem. So let us get ready. So I believe all the adjustments are common. So there is no any much confusion in the adjustment part, I believe. Okay. So let us begin the solution part without any further delay. So I am starting solution number 12 for illustration number 12. So title: Liquidator's final statement in the books of Mayura Company Limited. Liabilities rupees, assets rupees. Liabilities rupees, assets rupees. So now let us look into the problem part. So solution part we are. So always we are going to write here what? Yes. Realization of assets. Realizations of assets. So now realization of assets, under that first we are going to write what? Surplus value of secured assets. Surplus value of secured assets. So how much secured is there? Just check out. Creditors include preferential creditors of rupees 37,500 and a loan of rupees 1,25,000 secured by mortgage of land and buildings. So mortgage of land and buildings has been secured for rupees, a loan of rupees 1,25,000, correct? So now what is the realized value of land and building? 3 lakh rupees minus loan secured for how much? 1,25,000. So now deduct 3 lakh minus 1,25,000 minus 1,25,000, how much? 1,75,000 rupees. 1,75,000 rupees. So after that we have free assets. So I am going to write free assets. Free assets are those assets which is not mortgaged, which is not given as a collateral security for raising of loan. So under that, what else we have? Yes, machinery. Machinery realized for how much? 5 lakh rupees. Next we have patents. Patents is realized for how much? 75,000 rupees. 75,000. Next we have stock. Stock 1,50,000 rupees. Next we have debtors. Debtors for 2 lakh rupees. So then, do we have cash at bank? Check out in the old balance sheet. Cash at bank, how much? 75,000 rupees. So that's all. So let us total now. 5 lakh plus 75,000 plus 1,50,000 plus 2 lakh plus 75,000. So put together it is 10 lakh rupees. 10 lakh. I'll recheck 1 second. 5, 2 lakh 25, 5, 5, 10. Correct. So now till here you are all clear, right? Total 10 lakh rupees. See, whenever secured asset is there, obviously the first point, secured creditors is always what? Correct. Secured creditors nil. Okay. So then we will write liquidation expenses, then legal expenses if any. Okay. So first let us take liquidation expenses. Liquidation expenses is there. The expenses of liquidation amounted to rupees 27,250. 27,250 rupees. Okay. Then is there any legal charges? Yes. There is no legal charges, right? There is nothing like that. So next we are going to calculate liquidators. Yes. Remuneration. Liquidators remuneration. What they said about liquidators remuneration? The liquidator is entitled to a commission of 3% on all assets realized except cash. 3% on all assets realized. 3% on all assets realized. So 3 lakh rupees plus 10 lakh minus 75,000 because excluding of cash. So that means 10 lakh minus 75,000. 9 lakh 25,000. 9 lakh 25,000. So 3 lakh plus 9 lakh 25,000, that comes to 12 lakh 25,000. 12 lakh 25,000 into 3 divided by 100 into 3%. So how much? 36,750. 36,750. Then they say 2% on amount distributed among unsecured creditors. So 2% on unsecured creditors. Unsecured creditors. So how much unsecured creditors? We know or we don't know? We know, right? We don't know, right? Yes, let us do the working note to calculate unsecured creditors. So we can do directly, but still I don't want to follow that method. So let us go with the working note method so that you will also have idea, clarity, you know. So working note number 1. Working note number 1. So under that, write down calculation of unsecured creditors. Okay, so now under this, first to take total sundry creditors given in the balance sheet. So that is 3,62,500. 3,62,500 less preferential creditors, secured creditors. So how much secured creditors? Secured on land and building for 1,25,000, correct? So now deduct 3,62,500 minus 1,25,000 is equal to 2,37,500. 2,37,500 less preferential creditors. So how much preferential creditors they have given in the problem? 37,500. 37,500. So 2 lakh we got. Is there any bills payable in the problem? There is no, right? So then 2 lakh is going to be unsecured creditors. How much unsecured creditors? It is going to be 2 lakh. Correct. So this is unsecured creditors. So now we got to know how much is the unsecured creditors. So if we got to know about the unsecured creditors, let us move and finish off this 2% on unsecured creditors. So 2% on unsecured creditors, how much? Calculate. So that is 2 lakh into 2 divided by 100. How much? 2 lakh into 2%, that is 4,000 rupees. Okay, so in the last problem we did not calculate it on preferential creditors because he said, he was very clear in the problem that he said other than preferential creditors. That means you should not include preferential creditors while calculating liquidators remuneration. Here in this problem, he did not said anything about preferential creditors, and preferential creditors is also part of unsecured creditors. So that is why on preferential creditors, 37,500 into 2 by 100. So 37,500 into 2%, 750 rupees. That is 2% on preferential creditors have calculated. Okay. So this is what I have done the calculation. So now total it 36,750 plus 4,000 plus 750. So put together 41,500 is the liquidators remuneration. 41,500. Okay, so we have finished the liquidators remuneration part. So next, after settling liquidators remuneration part, we have to settle debenture holders. So debenture holders, 5% mortgage debenture holders, 2,50,000, correct? So let us calculate that. 5% debentures. 5% debentures. So how much 5% debenture? 2,50,000. 2,50,000. Add outstanding interest which is there in the problem, in the old balance sheet. Interest outstanding on debentures 12,500. 12,500. Okay. So here in this problem, they have not said anything like any dues or any outstanding or the date variation. Nothing has been given. So directly I am taking 2,50,000 plus 12,500, 2,62,500 rupees. So directly I have taken debenture holders. So next is unsecured creditors. I have to settle preferential creditors. So let me settle preferential creditors first. Preferential creditors, how much? 37,500. Then I am going to settle unsecured creditors as well. How much unsecured creditors? 2 lakh rupees. Clear? So then I am going to settle preference shareholders. 6% preference shareholders, that is 5,000, 6% preference shareholders. 6% preference shareholders. Capital. So they had a capital invested in the old balance sheet 5 lakh rupees. That I am writing here. 5 lakh rupees. So here they said in the problem, that is the preferential dividends were in arrears for 2 years. So preferential dividends were in arrears for 2 years means this 6% we have to calculate, that is 5 lakh into 6 by 100 into how many years? 2. 5 lakh into 6% into 2, that is 60,000 rupees. How much? 60,000 rupees. So total it, put it to outer column, 5,60,000. Clear? So next, the left out amount should be distributed among equity shareholders. So that is equity shareholders account. Equity shareholders. So now, how many shareholders we do have here? So that is 2,500 plus 7,500. Total 10,000 shareholders. Capital if you look at 1,87,500, then 4,50,000. So 1,87,500 plus 4,50,000 put together 6,37,500 we have to settle equity shareholders. But how much we have cash? 1,75,000 plus 10 lakh rupees. Total 11,75,000 rupees worth we have. 11,75,000. Okay. We have. So I am writing it in a pencil. 11,75,000. Both the side I am writing 11,75,000, 11,75,000. So let us look at the difference available. 11,75,000 minus payment 27,250 to the liquidator expenses. Then minus liquidator remuneration how much? 41,500 minus debenture holders 2,62,500 minus preferential creditors 37,500 minus unsecured creditors 2 lakh minus preference shareholders 5,60,000. So I am left with only 46,250 rupees. I am left with only 46,250 rupees. So the difference for these people available with us is 46,250 rupees. So then we have to do a working note. Okay. So what is that working note number 2 is all about? Yes, what? Working note Number 2. Calculation of loss borne by equity shareholders. Calculation of loss borne by equity shareholders and loss per share. Loss per share. Okay, so this is the working note number 2, which we are going to do it. Okay, first take down total paid up equity share capital. Total paid up equity share capital. Total paid up equity share capital, how much? Check out in the problem. Last year balance sheet 1,87,500 plus 1,87,500 plus 4,50,000. 4,50,000. 6,37,500. 6,37,500 less. What are we going to deduct? Cash available after paying preference shareholders. How much we are supposed to pay to the preference shareholders? 5,60,000. So after paying them, how much cash we have? I've written in a pencil. So we have 46,250. So we have a cash worth rupees 46,250. 46,250. This is what we have. So minus it 46,250 properly. So the loss, whatever we are going to get, is 5,91,250. 5,91,250. So then we have to check loss per share. Loss per share equals total loss. This is what total loss. Total loss divided by total number of shares. So how much is the total loss? 5,91,250 divided by total number of shares. So that is 2,500 equity shares plus 7,500 equity shares. So 10,000, that is equals 10,000. So 5,91,250 divided by 10,000. So that comes to 59 rupees 125 paise. That is loss per share. 59 rupees 125 paise. Okay. So next is working note number 3. Amount to be, calculation of amount to be brought in or paid to equity shareholders. Okay, so now let us look into it. Loss borne by or brought in by or paid to the equity shareholders. So now the loss is 59 rupees 125 paise. If shareholders have paid more than that, then they will receive. If they have paid less than that, they will bring the cash. So first let us look into that to 2,500 shareholders. So they have paid how much? 75 rupees. 75 minus 59.125. 75 minus 59.125, that is equals 15.875 into how many shares? There are 2500 shares. That comes to 39,687.5. 39,687.5. Okay, so this is what 2500 shareholders will get. Point B, they have paid 7500 shares, rupees 100 each, 60 paid. So they have paid 60. So 59.125. That is how much? 60 minus 59.125, 0.875 into how many shares there? 7500. 0.875 into 7500. How much we are going to get? 6562 rupees 50 paise. Okay, so that is what we are going to get. So if we add both 46 to 50, yes. So this is correct calculation we have done. So now this amount to be transferred to the equity shareholders section. So that is 2500 shareholders are getting 15.875. So they are getting 39,687.50. Then 7,500 shareholders are getting at 0.875. So how much they are getting? 6,562 rupees 0.50 paise. So if you total this both, 39,687.50 plus 6,562.50, total we are going to get 46,250. That is exact cash available to distribute among equity shareholders with us. So now if you total it, you are going to get 11,75,000, both the side total. So I'm going to write that total in the total column. That is 11,75,000. 11,75,000. So now I'm going to close this table. Since we have tallied it, I'm closing this. Okay. So now for cross verification purpose, I'm retotaling it again. How much? 1,75,000 plus 10 lakh. 11,75,000 is the total. Total is 11,75,000. The same way here also we are going to total now 27,250 plus 41,500 plus 2,62,500 plus 37,500 plus 2 lakh plus 5,60,000 plus 46,250 rupees. So 11,75,000 both the side. So we successfully completed this problem. So as usual, we have completed 12th illustration. If you have any doubt, you can reach me out over phone, WhatsApp or comment section. Your doubts are always welcome so that I can clarify your doubts at any point of time. So I'll come back very soon with one more problem shortly. So until then, take care. See you soon. Bye bye and stay safe.